I know a lot of people listening might have smaller accounts. If you have a $10,000 account, you should only risk about $100 on a trade. And people are like, well, how can I make a lot of money? Stop worrying about making a lot of money. Let's first get consistent. Okay.
Welcome back, everybody, to Be the Trader. Today, I have a return guest and a special guest, Ricky Analog. A lot of you all have DM'd me and asked questions about swing trading, asked me to maybe bring Ricky, and you didn't even know Ricky was already on the show a long time ago. But you know why you didn't know? Because no one knew who Be the Trader was at all. But I can tell you this, I wanted to bring him back because I wanted to bring more value to all of you. And I know he wanted to bring value to you as well. So in this episode, it's a little unique. We're going to go a little bit into mindset and so forth about risk management. We'll also dive into some charts. So if you're listening, you're driving, don't worry. We'll try our best, or I'll do my best to get a lot of information for you while you're driving. However, don't forget, we're on YouTube. You can actually watch the video as well there. But again, Ricky, thank you so much for joining me today, man. It means a lot.
Thanks for having me back, and kudos on growing the channel as much as you have. It's truly amazing what you've done with it. So happy to come back and have that much more eyes on it.
Thanks, brother. Thanks you. I appreciate you so much. I appreciate you joining me when no one was watching, which is awesome. So I appreciate that. So it's always good to bring you back, but let's get started. You know, I wanted to bring you back on to really touch on the topic of risk management, but also because a lot of people have been very interested in swing trading and they've been reaching out to me a lot about it. Now, I swing trade myself, not nowhere near probably what you do, but I just wanted to kind of bring in someone who's a lot more experienced in that realm. And so let's dive to swing trading first. And what I wanted to get into is if someone's thinking about swing trading, you know, what type of person should be thinking about swing trading is where I want to start. How would you explain that?
Well, I actually think most people should start with swing trading. It's slower paced. It's obviously lower commissions, lower fees. And I think you actually get a chance to give yourself a bit more of a fighting chance at survival in the market. Stocks are much more forgiving as far as the moves they make, and you don't get chopped up with all that intraday noise. So like if you're newer, I highly suggest swing trading. And also obviously people that might just not have the ability to stay in front of the screens all day long. That could really make it tough to do anything other than swing or position trade.
When it comes to swing trading and in terms of lasting longer in the market, and you don't have as much time to, you know, watch your trade, if you will, what is the process of a swing trader then? Like, is this someone who can just kind of look on the weekend if they have time? Give us an idea of what the process would be if they're interested in swing trading.
Okay, well, in my opinion, I honestly think that there's some underlying fundamental stuff that you have to be able to know or put to use, whether you day trade or swing trade or however you trade. And one of those things is understanding how stocks move. And I don't think that you can say there's any difference between the way a stock moves on a 1 minute chart versus a daily chart. I can literally look at a daily chart or a weekly chart or a monthly and see the same thing. Stocks are always going to move via a trend. And if you can understand that, then we can start to dissect like, okay, well, if a stock, and obviously it always comes down to, can you create a thesis based around that stuff? So if you can create a thesis and you can understand how a stock moves, then you can start to begin to see where are points of interest, where you might have an edge, where you can have a good risk reward, where you can join trend, maybe where things get extended and you want to reverse it. But regardless, you do have to have that underlying fundamental part down.
Now, when you say fundamentals, do you mean more so of just how a stock develops or how a chart develops and how a price action is? Or do you also mean fundamentals in terms of like float, market cap, and so forth?
Yeah, now I know I'm probably known for the fundamental stuff, but no, I actually just mean the basics, like like if this was basketball, you need to learn how to dribble.
Gotcha. But when it comes to, you mentioned something about looking at a chart. You can look at a 1 minute chart, a 5 minute chart, a weekly, a monthly, a daily, and you kind of see them all the same. Do you mean, because I feel something very similar to that, and let me make sure I understand what you mean, because what I kind of think personally is like a 1 minute chart, I look at a daily as each candle as 1 minute, like at the end of the day, right? Okay, cool. So you can simplify it. Like once you learn one type of way, you can pretty much see it in all all time frames, if you will.
And then if you have a lot of people come into this business thinking they want to day trade because they see the flashy stuff on social media or whatever. And so here's what I tell you. If you think you want to be a day trader and you think you have a viable strategy, apply it to a daily chart and see if it works, because it just gives it that much more time for you to kind of digest it, analyze everything that's going on, figure out if anything has changed about your thesis. So it gives you, like I said, it gives you more of a fighting chance. And then maybe if what you thought works day trading did work on the swing part of it, maybe you can try to move over into the day trading world. But a lot of people find when they start swing trading that there wasn't really a need to be all in awe of the day trade world.
Yeah, I understand that. And I think what's interesting about swing trading is you can kind of live your life and swing trade at the same time. And you can kind of work your job and do multiple things and not have to worry about leaving a job right away. And I think that's something a lot of people need to understand, that there's other options besides just day trading. And the stress of day trading is just way higher than swing trading, because it's like you said, it takes days sometimes for it to pan out, whether you're wrong or right. And therefore, the stress of being wrong instantly isn't as damaging if it's over a couple of days and you're just wrong.
And not to mention, I would advise people, if you think you want to get into the markets, don't quit your day job first. And in order to, unless you work in the evenings, a lot of times if you want to try your hand at the market, you want to keep your day job. That means not being able to sit in front of the screens.
Yep. And so let's talk about a little bit about just a big picture in terms of strategy, if you will, before we really start diving into examples. But in terms of someone who's interested in day trading, what's something they can think about? Is just as simple as just daily breakouts? Is it as simple as just buying dips? Can you give an example of something that's easy for someone to understand at a newer level?
Yeah, I mean, stocks are, like I said earlier, they're going to trend. And the only way that can happen is, let's just discuss an uptrend for sake of simplicity, is going to be via higher highs and higher lows. So if a stock is in an uptrend, then you want to join the trend. You need to kind of identify where is it trending, where are levels that we can buy a dip, and then have clear risk. So, I mean, let's just jump right into the risk management aspect of things, because obviously, in my opinion, that is by far the most important part. It's always going to be a product of two things: your stop and your position size. And in order to understand where your stop should go, it's my opinion that you really just need to be logical about, one, be honest about what your thesis is. So if you're saying this is in an uptrend, I'm going to buy a dip. Okay, well, at what point does the dip become no longer a higher low, but it's now a lower low? And we have to be honest with ourselves and say, look, we're wrong, because where you're wrong is where your stop goes. So once you have your stop, that gives us the ability to figure out what kind of position size to take based on what we're willing to risk on any given trade. And, I wouldn't suggest risking more than 1% to 2% of your full account. And people think I'm crazy when I say that sometimes, but 1 or 2% of your account is pretty good amount of risk to give yourself a fighting chance. That's what we always talk about. You want to give yourself time to learn. So if you're risking, let's just use a $50,000 account. We can just start with a $10,000 account. I know a lot of people listening might have smaller accounts. If you have a $10,000 account, you should only risk about $100 on a trade. And people are like, well, how can I make a lot of money? Stop worrying about making a lot of money. Let's first get consistent. Okay. So you want to risk $100. Your stop is, let's say we're talking swing trade. Your stop is a point away. Let's just say we're going to keep numbers simple, right? So if your stop's a point away, you take 100 shares. And if you're wrong, you stop out, you lose your $100. But you should be looking for setups where, if it is an uptrend, then we should be identifying a clear level of support and giving yourself the edge to be right. Because then when you're right, if that trend resumes, you're going to make multiples of what you're risking.
So let's stay on that topic of uptrend and risk management. Let's say you see an uptrend. And are you identifying your trend with a trend line as well as just looking at higher lows to help you out? Or are you just mainly just looking at it with the eye and saying higher lows, cool?
So I look at multiple time frames. So I don't just use a daily. Let's stick with swing trading. Okay.
Sure,
so
yes.
We're talking swing trading. I'm looking at a weekly too. And I really want to use a weekly to help cut out some of the noise. And you'll always find this, whatever kind of trader you are, the farther you zoom out, the less noise. But don't confuse that with that stocks don't still move the same way. They still will have higher lows and higher highs, or vice versa. But you'll just get less noise because each candle is a longer period of time. So when you cut out the noise, you can see clearer levels that have more importance. So if I'm trying to buy a dip, I might look at the weekly and say, well, what would be a good spot where I can reasonably expect buyers to show up? It also would definitely involve using some key levels that had volume. So I use a lot of stuff with volume as far as where was there a lot of buying? Where would buyers might want to protect their position and show up and support this stock? And then also using that same thought process to be honest about where is it actually going to be a broken trade. So you might be buying an uptrend on a daily chart, but I might use a weekly chart to identify where the true lower low is, because I don't want to get chopped out of that trade. I'd rather take less size and give myself a chance to be in it than to use a really tight stop. And I see this with newer traders all the time. Man, I'm going to use a 10-cent stop and take 10,000 shares. And how often are you wrong? You just get paper cut to death. So yeah, that's kind of my thought process on where I'm trying to get an entry and figure out where I'm risking.
I like that you said that because, and I apologize. Did you have
No, go ahead.
Okay. Well, I like that you said that because it leads me to the next point or next question of, let's say you find the optimal area. Let's just use round numbers. $100 is the dip area that you want to buy at $100, right? You want to buy at 100. It's at 105. It's just uptrending. It's dipping to $100 because on the weekly, you're like, hey, it's strong there. Maybe on the daily, you see support. Maybe you see heavy buying from previous days there. So you buy at 100. At what point do you give yourself, because swing trade is a little different, and I think everyone has different opinions on this. I'm very curious in your opinion. If it breaks 100 and it's in that same day, do you give it that day? Do you give it the next day? Like, how do you gauge getting out right away? Like, is it, hey, it broke 100, I'm out right away? Like, give me an idea of what your thought process is there.
Yeah, with swings, I do typically want to see it stay below a level as opposed to just flush through it. Because what will happen a lot of times is it'll do that and it just shakes everybody. And on top of that, like, you'll never see me stop on a whole number. I'm always like, if we're talking 100, I'm probably going to be like 99.30s, something like that. And like, if that requires me to take a little less size to give that wiggle room, that's fine, because it's all about making sure when you stop out that you were wrong. And, you can't just be, again, you can't have too tight of a stop. And the same does go for me personally for my intraday trades as well, where if I'm day trading, I'm not trying to get nicked out on something stupid because I oversized. So like if it's a $10 level and, it shoots up, comes back under and pops right back above it, I'm not trying to get stopped at. So I have levels of wiggle room. I have ways of making sure I'm not just getting shook out. And a lot of it always comes back to like not oversizing, giving yourself the comfort level to stay in the trade until you're proven wrong.
I know a lot of people are going to ask this next question already. They're probably scratching their head like, Alex, what does that mean? And I get this asked too, where they'll be like, does that mean I need to always give it? They use that word always give it 5% wiggle room. What do you say to that?
Nothing's ever always in trading. A lot of times, sometimes I talk about this a lot too in our room, is context, things such as what's actually happening. What's the backdrop of your trade? So for instance, today was a really perfect example. People might've been trying to buy dips today, but when I see the market, like the SPY or the NASDAQ up where they're at, like in my opinion, a bit extended, doesn't mean I'm bearish on the market. But it does mean that I might be a little hesitant to buy flushes. I might be looking more for short pops. Now, where does that come from? Context. That's the backdrop of your trade. So if the backdrop of your trade says be very careful on a long and something flushes below a level, I might not give it the same kind of wiggle room, like especially if it blows through it on volume. Jump out, be wrong. If it shakes you out, it's okay. There's always the next trade. There's no reason any one trade should make or break you. I mean, I looked at my stats from 2020. I always do like an end of year review, and I think I had like around 2,000 trades. If you have 2,000 trades, why do you care about any single one trade, right? So zoom out, look at the bigger picture, be wrong, take your losses. I know guys out there that are insanely profitable with 30% win rates. So
that's wild. That's wild, right? I mean, that's because they take high risk reward trades, right? And they are able to take losses and comfortable losses, which is why they risk so low. Just like you were explaining, like don't focus on making money because you can be successful as long as you stay alive, right? Like stay alive long enough to acknowledge and witness things that happen. And then 3 years later, you're like, I've seen this 3 times, like 3 years in a row now. I know how to trade it. Now let's dive into more of the examples here. So if you want to go ahead and take over and share a screen and review one of your swing trades, I don't know if did you have one here or how many did you going to show?
I actually have, I didn't know we were going to just talk about swing trading, but it's funny because I have some examples that actually are both in one trade. It's
oh, great.
It works kind of well. The first one is a loss, and I'm going to show you. It's not like I enjoy taking losses, but like I just said, it's all about staying alive. So this is BIDU. This is before the big Bill Wang or Wong, however you pronounce his name, fiasco where he got them blown out by all of his prime brokers. But this chart, Baidu was a clear example of a strong uptrend, strong chart. And, when we started pulling way back from highs, we made this low. I don't know what the date was. It looks like early March. And when we pushed back up, I kind of wanted to buy a dip on it, risking those lows. And as we were just talking about, really, like it's all about knowing where you're wrong and not getting stubborn, right? So like it's a swing trade. So I'm just dabbling in. I add on some weakness. I think that was all the same day. But then the next day we gapped down and I knew, there's my stop. I'm going to add right in front of it. And in fact, it actually pushed back up to like break even. But that's another thing about, the way I trade personally is I'm not really big on taking break even trades. I'm either going to go, it's going to work or I'm going to be wrong. That's kind of it. I don't want to be cutting my winners short because then when you have your losers, they just start eating them up. So like this did go back towards my average and I didn't take anything off. I stopped out under 228, which was the clear level where I was wrong.
Yep.
And this is the reason I picked this example was because it's such a clear example of why you respect your stop.
Yeah, like, it sure is.
That would not have been fun to stay in. And obviously we found out the story later, but we didn't know that at the time. And that's another kind of lesson too, is like, always remember anything can happen and you don't know until afterwards what the story was unfolding. Right. And you don't want to get caught in that.
So now, before you move on, I don't want to interrupt you, but before we move on, I have a question. So go ahead. Okay. So clearly, if you're listening and you're driving, you're probably like, what's going on here? The Baidu, you can see on YouTube, it's a clear uptrend chart on the daily. He's showing a daily picture. But I have a question real quick. Did you look at this on the weekly as well on this example?
We can pull up the weekly. And so you can see that initial pullback was right into kind of some key levels if you zoom way back, right?
Yep.
Some key levels plus the weekly 20 SMA. And I use the 20 on every time frame. I'll give you guys that one. But, it pushed back up from that level. And when it pulled back, here was the thesis. And this is where it's important to learn how to create a thesis, no matter what kind of style trading you do. The thesis was that we were going to put in a higher low here on this big red candle and push back up above 278. And I think if you go on Twitter and look, I think prior to this big breakdown, I even tweeted, I said, Baidu over 278 can go right back into beast mode. And if it had a broke back above 278, I really thought we were going back to highs, which is why I'm completely fine with, I took like a 10-point loss on it, swing trade, not a big deal. It was a measured loss. But the risk reward in it was very skewed in my favor at the time of taking the trade. Now, you're not in control when you're right and wrong, but you just have to be okay with taking those losses. But yeah, definitely looked at the weekly chart before putting that thesis together.
I love that you said, a couple of things that really stand out And if you're listening, if you're watching, you need to rewind what he's saying here. I love that you sharing a loss first. It's awesome because number one, that's a reality. Like if you're a trader, you're going to lose and it's going to happen almost quite often, like it's just how you manage your losses, how you handle them. And Ricky's pure example of like, hey, I'm getting in, I have a thesis, I'm buying on these dips. And even though it broke, he got out. He didn't hold against his plan, which is so important. My question is, when you got in, what was your profit targets? Do you plan to sell slowly? Do you plan to sell, all at the highs? Like, what's your plan there?
First target was the highs.
Oh, okay. So do you sell just all right there, or do you like?
No, I would have scaled out because the thesis was that this is a pullback in a larger uptrend. So the first target was the highs. After that, if a trend's going to continue, it has to go higher. So therefore, higher would have been the further profit targets.
Oh, nice. So there's the idea, sell half, a quarter, or almost all of it at the highs and then hold?
I probably would have sold about half, maybe more.
Gotcha. Cool. Well, I appreciate you reviewing that. And if you have anything else you want to share on this specific trade, go ahead. Or if you would like to go to the next one, that's fine too.
Well, here, before we move on from this chart, I will point out, remember the level that the breakdown happened at, which was 228. That was where my stop was. Okay. So watch the next example. This was on 326. This is a day trade. Now, I also swing traded this. Swung trade? I don't know. So you can see here on the intraday. So we sell off even further. We're coming down into some levels that I liked on the daily chart. So I was willing to kind of risk against some lows here, and I put some on. And when we broke the low, I stopped out. Mm-hmm. I tried it again. I was wrong. I stopped out. But when we got the trade, and if you look, after this, I'm going to go to the daily chart and the intraday chart, and we'll look at it. There was a very good reason for this 174 to 176 area to be very, very interesting. So, when it bounced from there, I definitely wanted to buy a dip, risking that low. So that's what I got. And you can see, like, I took 2 paper cuts earlier in the day on this, and I ended up extremely green on this trade. It was about 20. I think the average on the sales was about 20 points. Now, I also bought this in the same swing account. All my swings are usually in my SEP account, which is Schwab, which is why I only have the trader view charts, unfortunately.
No worries.
But you can see I bought the bottom of that. And where did I sell? I sold that 228 level where it is broke down.
Key resistance. Yep.
Yeah. So that was a 50-point trade after taking a 10-point loss, which is, exactly the point I want to hone in on is using you can take those losses, but you can't. Do you think I would have been able to buy this at 176 or whatever I bought if I never stopped out of the two? What was it? I think I had 237 average when I stopped out at 228. So I lost almost 10 points. There's no way I'm buying that dip the same way I bought it if I'd never stopped out earlier. So that was like really, really the key point there was, that's why we stop out. 1, so we don't ride this all the way down. And 2, so that our heads are clear to take that trade when the trade is ready.
Absolutely. And can you show us that? Because on that other execution chart, it's hard to understand the reasoning behind that dip buy. And you said you could see it clearly when you were going to show example on the.
So, well, obviously you have the 200-day right there, and you see all this consolidation back here from prior. This is one of those charts that's just been on my watch for a very, very long time. It's just been a really strong stock, and so there were levels that this was testing from back here, plus the 200-day, plus the weekly 200 you got. There was a lot of confluence all lining up. And I just, wanted to take another stab there, especially and here's the thing, I didn't just buy that dip right on the dip. I waited for it to show that there was going to be some buyers there. And that's I think it showed it here in these. So I bought this in the SEP account the same time I bought this in my day trade account. It's a pain in the ass, I'll tell you that much, because I have to log into all these different accounts.
Oh, yeah.
But yeah, so like I waited for the bounce. I didn't just buy it here. I actually waited for some support to show up and then bought the dip risk, and we had clear risk. So like I'm by no means saying I was going to just hold this. Like if we lost lows, I would have stopped out again. But you got to take your shot, shoot or shoot.
Yep.
So
it's interesting that, you know, a couple of things really show here. It's you. I'm assuming, and let me know if I'm wrong here. I'm assuming this was more of a swing setup to you, but then you saw an intraday setup as well.
No.
Okay.
I was like, because like I said, like if you look, I took the 2 paper cuts on the day trade account first.
Yes.
So like I had been and I'm a full-time trader, so like I day trade all the time. But when things set up that clear for me, there's a definite reason for me to want to put it on for the bigger picture, which is why, you know, I'm okay taking the intraday trade where I took it. Let me see if I can find that chart again.
And it's interesting on those intraday trades. Like I love that you took it, cut it. And it seems like you even waited for it to show some kind of support before you took it, because it actually like supported a little bit.
Plus, like, yeah, if you look at where it broke down from, there was no way I wanted to buy it again until it got some extension. And that's another thing. Like, I'm a big proponent of watching for emotional moves. Like, you know, if we bought this here at 185 after breaking the lows, in my opinion, that's not emotional. I want to see capitulation. I want to see the emotional move. Because when that reverses, then you get all the same emotions rushing back into the other side of the trade. So everybody that capitulated feels like, oh crap, I sold the bottom. You get shorts that are just completely exhausted, or longs too. You know, they're exhausting out, and you run out of sellers. You're not going to find a good, strong company. I mean, if you see capitulation on Facebook or Microsoft or Apple, those kinds of names, I'm a big buyer of those day trade and swing trade, because eventually there's going to be some big money stepping in on those names. And if you can get the emotional moves, you put yourself at a really good risk reward position. And then, you know, you can always lock some, add on dips, see if it's working, and then you can let the trade kind of work for you, as opposed to trying to chase it.
You know, there's a couple of things that you've highlighted with this trade, but one thing that really stood out to me when you just showed this trade itself in terms of the intraday day trade, along with the swing trade, just a combination of the two. But the one thing that stood out is when you got in at 177 and 50, whatever, when it continued higher and then came back near lows, I love in this instance, you did not get out. And instead you stuck to your plan, which a lot of people have struggled with, right?
You segued this perfectly into the next example, whether you know it or not. Literally, I titled this chart, this screenshot says, March 19th, PTON, why you don't stop out early. And this is exactly that. Like, look at this. My risk was against 102, low a day. So it showed the ability to, you know, push back. It went green, red to green, made a higher high after a higher low, and I wanted to buy a dip. And instead of giving it the full risk, which I should have under 102, to prove to me that my thesis was wrong, I stopped out early. And then this is what you have to sit and watch when you do that. So I'm human. I still make those same mistakes.
Thank you. I had no idea this is funny how it happened, but it's great that you showed this, because I can tell you put thought in how you wanted to share these, because it's just like, it just really shows you that, number one, people who are watching or listening, they'll hear you, Ricky, they'll hear anyone I bring on the show, and they literally think, and it's just not because of how you guys talk, but because of just how people perceive others. We literally just perceive them as like the untouchables, the ones who can do it and I can't. They must always do it perfectly, right? But it's just pure example that we're all human. Like, it's a matter of how you handle your losses. So how do you handle whenever you do take paper cuts compared to someone else who's new? Like, why is it that you can take those 2 paper cuts on the previous trade, get back in it, and then on this trade, like, not chase it? Like, can you give an example of how you handle that? Because that's risk management in and of itself as well.
I think it's just about emotions, right? So like, you don't want to chase it because, I mean, yes, this trade works, right? But if you buy it up here at 103.50, you still get a trade that works, but you have to sit through this and probably, go change your pants once or twice because it looks like it's just going to roll back over and wash 102. So, buying that dip makes it so that you have the ability to sit in it. I love that I'm saying that when I didn't sit in it, but the truth is that you don't want to be that guy buying this strength. You want to buy the pullbacks. Obviously I was just, and what I was doing was buying it right into the previous day's close right there. Yep. Thesis was that's going to hold, but low a day stops what I should have had. And I knew it, and I knew I was wrong, but like I said, I'm human.
Understand. And is there something that you do personally after trades like this, like to help yourself for the next day or anything like that, like a routine or something you say or do?
I take so many, like I day trade too, right? So this was actually a day trade. This wasn't a swing. I don't remember this day, but I do always focus on the bigger picture. Like if I take, like, let's say I have a big red day, because they happen. It's not, hopefully, it doesn't happen too often, knock on wood. Been pretty good lately, and you get red days. Oftentimes I'll just look at my like 3 or 4 year P&L curve and just go, it's just a really, really small dip. So it's nothing. You just zoom out same way you would on a chart you're trading, right?
It's literally seeing the problem as a pebble on the beach instead of like a mountain, right? You know what I'm saying? Like It's literally seeing like in a big experience. This is really
like I said, I took 2,000 trades. Like what's one trade? And honestly, I like I said, I don't remember this day, but if I had to guess, I was probably already in maybe 2 or 3 other trades. And so and I'll tell you this, it's really funny is oftentimes if it's a busy morning and I'm in 3, 4 trades at the same time, it makes it actually easier for me to clip my losers really quick because I have trades working. So why let these losers even linger in my position window? So I just clip, be done with it, move on, and let the ones that are working work. But I guess that's probably a bit of what I do to deal with it.
When it comes to, let me ask you this, do you have another chart you want to share? And if not, that's okay, because I wanted to ask.
There's one last one, and it's really the only thing I was trying to highlight with it is just why we stop out. And I guess it's same thing as the Baidu chart, right? But this one, I actually was well into the green, and I missed covers on it by I want to say 6 cents or something. The thesis was to start covering into this 25 flush. And when it came back up, hopefully it's going to be a lower high, put a little more size on, but you can see I had to eat the loss, but it went 27.50 afterwards. So it's just want everybody to see that, like Alex was saying, we're human, not a robot. And the one thing I think I do well is I'm quick to just eat it and move on.
Amen to that. And the only thing I was going to ask you before we start to wrap this up, if you don't mind closing out the shared screen so we can go back to full screen mode.
Make sure I know how to do that. Hold on. There we go.
Here we are. So before we start to wrap this up, one thing I really noticed, and I just want to ask you, is there an idea or thesis in your head or the way you think when it comes to, is it one shot, all in? Is it this setup? I'm going to go quarter. How do you think when it comes to one bullet or 3 bullets? How do you think about that?
For me personally, everyone's going to have a bit of their own way of looking at that. I don't scale into trades very often. A lot of the names I trade are pretty liquid. And so I'm putting it on with my set risk. There are times when I will put some on and wait for it to confirm. And then I'll add just so I have a bit more validation that my thesis is correct. But one thing I will say is for any given trade, there can be numerous theses. Is that the right word?
That's fine.
Theses.
This is not English class. We don't care.
Yeah, I'm a trader, guys. But the thing that is important is that you acknowledge what your thesis was and make sure you don't switch it to accommodate something not working. So for instance, if you know that like you're shorting a pop to pre-market highs, like I know a lot of people watch this probably small cap trader, right? Gap and crap, short the pop to pre-market highs. And what happens? Well, it breaks pre-market highs and then you go, oh, I see a daily level coming up. I'll just see what happens up there. And then breaks that one. The next thing you know, you're like way outside of your risk. And that's the one thing I always tell people in our room, like make sure it's okay to be wrong, but don't be wrong for the wrong reason. Like just stick to your plan, trade your plan. Don't worry about whatever your friend in the other room is doing or what you see on Twitter. Like stick to your plan and let your edge play out, because that's the only way. If you keep chasing things and adjusting your plans, it's just going to get you cut up.
Thanks, man. I appreciate you in on that. And is there anything well, I want to find out, because just in case people didn't hear you in the first episode, first off, if you haven't, go back, check out Rick Analog's first interview. If you want to know more about his background, because we dive deep into where he came from, how he started trading. But also, Ricky, let people know if they want to reach out, learn more about you, how they can find out and learn more about you, my man.
Awesome. Twitter at Ricky Analog. I'm a moderator over at truetrader.net. Pretty cool community over there. Some really big traders that, you know, I feel blessed. I feel like I've always been lucky enough to stand on the shoulders of giants. And I'm very lucky in that respect. So head over there, check that out. YouTube, I have a channel that's kind of just dedicated to tearing apart SEC filings on small caps. That's at YouTube at Ricky Analog, I guess. Yeah, that's an Instagram. I don't know if people, I don't put much on Instagram, but
you're very active on Twitter, and we'll have that pop up whenever they're at the beginning of the episode. So no big deal there. But look, again, my man, appreciate you being here. It was a pleasure. And thank you for sharing the insight on both winners, losers, and how you handle that. Thanks, man.
Thanks for having me. And Alex, as always, man, keep doing what you're doing because you're crushing it, bro.